Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show that breaks down the notable moves across financial markets through the lens of technical analysis, and we do it in 20 minutes or less every single week. Thanks for being here. Thanks for joining on the summertime weekend. I'm off camera today, but we got plenty to talk about. It was an eventful week, to say the least. So let's get right into it here. First off, our sponsor, IBD Investors Business Daily. We've got links in the description of this show you can check out as soon as you're done watching to their Market Surge and their IBD Digital subscription. Get you introductory savings on both of those platforms. Check it out once you're done in this episode. Now, I'm going to take a little bit of a roundabout way on talking about this week's action. So kind of coming into this week, we were seeing weakness across the board. We were starting to see some of the defensive areas of the market. Let's get my drawing tools on here. Consumer staples, XLP, starting to firm up in this nice tight orderly base. We had this nice higher low and it was looking prime to move here throughout this week. And then we got hit with Target earnings. Target reported earnings this week. Now, Target's been in a bit of a doghouse here for quite some time for a variety of reasons, but certainly no help after reporting earnings. We had this gap down and then some kind of penalty box trading. And then we hit Walmart right after the very next day. So Walmart misses EPS as well. It did raise the outlook for the full year ongoing, but still, the stock kind of penalized here, and consumer staples, defensive area of the market, kind of left without that strong breakout. Meanwhile, on the other side of the risk spectrum, we had semiconductors. And semiconductors here, I posted this chart on X earlier. This is Market Surge, basically highlighting the fact that they were starting to roll over. They were starting to fall back down towards these 2024 highs here. And I sort of put out the line in the sand, so to speak, that this week's close would be important for SMH to stay above those 2024 the levels. And all the while, we had the S&P 500 selling off basically incrementally here. This was last Friday, Monday, Tuesday, Wednesday, Thursday, into Jackson Hole, where we got the soon-to-be famous Powell pivot coming to the rescue, saving this market that was on edge, on jitters, a little bit worried, maybe overextended. And Jerome Powell kind of came in here and swept away all of the concerns. The Fed now citing concerns over slowing economic growth, citing potential labor market weakness, and really the big kind of shift here was returning to a flexible, sort of forward-looking inflation targeting model, right? Kind of leaving behind the wait and see, waiting for data, 2%, wait, right? Looking now at a more flexible, forward-looking model, and the market loved it. Now, of course, this is summertime trading, so things move quickly. It takes less dollars to move these markets around. And we were just coming off of a 4-day kind of sell-off here, but markets responded in kind here. This is the Russell 2000. Here we go, breaking out and doing it on some pretty heavy volume given the seasonality that we find ourselves in. This was the intra-week slide here. We had this nice higher low and then off to the races. Small caps leading for the second week in a row. This is small caps relative to the S&P 500. I know this is hard to see. This is looking back over the past 5 years. But this is essentially plotting the daily relative returns here. And you can see today was a very meaningful day, over 2 standard deviation surge here in the Russell relative to the SPY. And just to give some more kind of color here to the Russell 2000, this is the year-to-date performance of the SPY versus the Russell 2000. And you can see the Russell is still lagging. It's up only, less than 7% this year, but it is catching up quick here. And so this rotation into small caps, which we identified last week, is getting some legs here, right? This is a second now week of follow through and some outperformance. So there's something a little more durable and sticky behind this rotation. Meanwhile, you've got the old boring Dow Jones breaking out to new highs. Great looking pattern here as well. You kind of have just a big, kind of serious base and accumulation here that's been put in since late 2024. breaking out here on heavy volume this Friday. International stocks, we've talked about it multiple times throughout this year, but you can see that ACWX, so I'm just using this as a proxy here for international stock markets outside of the United States. That's the blue line you see on this chart. And you can see they're up 24%, almost 24% year to date in the face of SPY up 11%. So once again, you're getting some stickiness here. And this is even despite all this strong arm rhetoric of tariffs that are, kind of plaguing the world now. But they seem to be doing just fine outside of the United States. So good run here in international stocks continuing. And here's gold miners. We were a broken record about gold and gold miners throughout this base back here. And now you can see they're making, again, a second kind of push up. You had this small little consolidation above this base here, making highs. So really, all is to say, life was pretty good this week. If you could make it till Friday, if you didn't get stopped out, reduce risk, the anxiety that went into perhaps Jackson Hole in the end of the week, then you certainly came out the week feeling a lot better. Here was the total scoreboard on the weekly return. Small caps again, top of the list here, 3.4% for the second week in a row. Dow Jones took the second spot. SPY was a little over, just barely green, but again, good recovery after its 4-day sell-off. NASDAQ 100 couldn't quite get green, still finished down 1%. This is the V shape here of the SPY action into the close of the week. And here's the price action of the SPY just kind of over the summertime trading since the end of June. This is what things kind of look like here. Friday was, again, the big spike, and this technical picture still looks pretty strong. One of the themes that we've been trying to kind of illustrate here over the past few weeks, while lots of people are getting bearish and uncertain on this market for very logical reasons, I think the hardest action is to remain in this market, is to stay long this market. I think that is the pain trade right now. And it is hard to do because there are risks out there, but these trends are still holding up. Yes, we are getting these brief periods of, selling pressure. And yes, there are individual stocks that got hit much harder than what this SPY chart shows. I mean, if you go out to some of the tech stocks or even some of the crypto stocks, they were down, double-digit percentages, or it's still in declines. But as a whole, in the aggregate, Mag 7 stocks, market cap weighted stocks, and now some small cap stocks are still keeping things alive here. So I think right now, kind of looking ahead from the technical perspective, I think you've got a new higher low that you can use, which is approximately this week's lows, Thursday's lows. And if we're staying above Thursday's lows, then if you're a tactical active trader, then again, I think you just got to stay long this market. You got to try and keep a foot in the door before it gets away from you. If we start breaking below this Thursday's lows, then, there's some risk management you could take. And then the big level, which we talked about the last time, is this 620 area. I think this is going to be the bigger intermediate term shelf here, and maybe we stay range bound for the next few weeks. I mean, seasonality is not our friend right now. This is a weak period in the market, generally speaking. And so, maybe this is kind of a fake out here. We try and push up, we fail early next week, we come back down and we chop it out. I think, again, that would be, generally speaking, kind of healthy as some rotation happens and some consolidation happens. But, the case for just being outright bearish here is a little bit tough to see if you're really listening to the price action. This is the NASDAQ 100. We're going to hit kind of the price action analysis here back to back. And again, I think we got our nice higher low that we got put in here on Thursday, potential higher low, right? It's not confirmed yet. And notably, you do have some more weakness here, right? Take a look at the SPY chart. SPY got all the way back, basically made new all-time closing highs on Friday. But the NASDAQ 100 is certainly off those highs. So you do have a little bit of kind of negative divergence here that you could kind of say technology is weakening just a little bit on the margin. So that is, something we want to pay attention to. But again, broadly speaking here, we held the critical levels. I think 550 or so is going to be a good intermediate term line in the sand. Maybe we chop it out for the next couple of weeks into September. But for now, the big correction has been saved for now, right? Anything can happen, but price action so far is still hanging in there. Here's the VIX. VIX again kind of rising all week into the event, and then we saw a good plummet here, 14.22. That's good for I believe new year-to-date lows. I think this would be the new closing low on the year. You can see the VIX has just been kind of sloping down, grinding down in this channel, and those are some new lows. The dollar got absolutely hammered on Friday's move here. So this speaks to some of the commodity action we saw as well in gold and oil and crypto. All, loving the dollar kind of falling off a cliff here on Friday. It was a big one-day move. 10-year Treasury yields also moving down here in lockstep, 4.26. Not quite at cycle lows, but, rolling over, and you definitely are in this series of lower lows and lower highs for sure, and you got marginal lower lows in the 10-year Treasury yield. So sector performance on the week, it was, again, a pretty strong showing across the board. Energy, real estate, and materials were actually your three biggest. Those are different groups, and that's, again, some of that small cap strength that we're seeing. It's not just technology and communication services. In fact, take a look at where they were, right? And this speaks to some of that NASDAQ underperformance. So you definitely had some rotation. You had sort of, with rates, coming down, it's just more cyclically tied to some of the real world economy stuff and some of the more profitless companies. But those were the things that were certainly getting pushed to the upside this week. In terms of our smart trend filter, this is our indicator built for TC2000 and TradingView users. It's available on our website. You've got 4 sectors in a clear bullish state here. So this looks across price, volume, and time and price action relationships. And so there was a little bit of, damage done or a little weakness from beginning of the week into Friday. And so the 4 strongest out the gate here or coming out of the close is healthcare, staples, materials, and communication services. Notably, materials is the interesting one because that's kind of the first fresh buy signal we've had there in quite some time. Staples, healthcare, they've been working recently. Communication services still working. Pretty much everything else here is neutral. And most of this will likely turn up to our bullish state early next week as long as that strength sits in there. But with some of the selling pressure we saw throughout the beginning of the week, they sort of penalized a little bit of our outlook here on some of these other sectors. 52-week highs and lows. Now, this does not have Friday's data, so I'm going to be very interested. I record this video before I get the final numbers in, so we'll have to see what this looks like next week. But I'm expecting a pretty good uptick here in the number of stocks hitting 52-week highs. I'd be curious if it's going to take out the highs here from August the 15th, I believe this was, when we saw that nice push. I have a suspicion it will. And if we can get some more breadth thrust here underneath the hood, that's going to be very positive for us as we move into September. Percentage of S&P 500 stocks, don't have too much to say. Put call, don't have too much to say. Here's Bitcoin, 3-month chart. So we came back down and we challenged the kind of August lows here or late July lows, and we pivoted. And again, this was Friday's candle, and it saw a nice kind of range expansion to the upside. Looks like a double bottom here that could be in place. That's what bulls are going to want to defend against now. I think it's an important spot. I think if we lose this, I've been saying 110. This looks like we got to it down to about 111 or so. But I don't want to see this, fall too much, lower. I really want this low to try and hold here for Bitcoin. I think it's important structurally. So we'll see if it can moving forward. I would be surprised if it just goes off to the races here. There's still some overhead supply. There's still, a couple of failed breakouts. So I think, bulls need to collect themselves a little bit, but I think it's a good hold down here. I'd love to see us just kind of chop around for a couple weeks and then make a run at those highs again. That would be, nice and bullish to me. I'm still long Bitcoin across multiple trading systems and accounts. So we'll see if it can hang in there. Ethereum deserves its shout out this week. This is Ethereum since 2022. this has been in a drawdown, basically, and it is finally back towards those 22 levels. I think we officially broke out. We're basically right there. We may have tagged all-time highs briefly, but when you look at this weekly chart of Ethereum, it is a pretty constructive looking chart. I know all the Bitcoiners will sort of hate this. I get it, but it's doing its thing. It's got its time in the spotlight right now. You've got a lot of champions of Ethereum and some different companies now, and trying to put it on their balance sheets. And so we'll see how it all turns out. I don't have really any skin in that game. In terms of some stocks, though, that we can look at, so I want to highlight a few stocks. This is coming from our momentum trading model. This is Quant Rockets, which we launched a couple months ago. And so NXT, I've talked about this. We had a trade in this somewhere in here and then got sold out in here, and now it's back involved. So it's been a little bit of a whipsaw action. Had a trade, got out of it. Now it's back in. Technically here, looking pretty good. Nice, kind of structure in here. Just want to see if it can start to clear and trend a little bit cleaner. It's not overstretched. It's got a good looking pattern towards it. Tesla is another one here. And again, this is one that we had a trade, tried to get involved in it, sold out basically at break even. And now our model identifies this again just the other week. And now here it goes. This coming into today, you see the status of a warning sign here is because it was on the chopping block coming into Friday. This was basically like, hey, you've got about a day or so to get your act together before you get dropped off our quant model, but it held in there, right? And we saw this nice push up. So we'll see if it can continue to move. But Tesla is something we have coverage on and we like. And I'll leave you with one more, which is United Airlines. This is a recent entry here. And so this one is starting to work again. Nice expansion up on Friday. But these are three stocks that our momentum model likes at this time. If you want to know more about how that operates, we've got information on our website at this address. All right. Now, thinking about next week, we do have an important date to remember, and ironically, I don't remember it, but it's next week, and so I'll have to look it up. But it's Nvidia earnings. I'm guessing Wednesday, but I could be wrong. But check out when that date is, because I will right when I'm done recording. And so Nvidia here has been, really kind of just floating higher in a pretty, cool, calm, collected trend since the April lows. It looks a little messy now in the short term. It did break this slope in this uptrend. Let me see if I have another chart. No, that's the only chart I brought. So, it looks a little challenged here from a price action perspective, just with this supply kind of hanging in here in this 180 zone. So I don't really love the look, but earnings is going to catalyze this stock, right? And I believe I did look earlier today. It was about a 7% implied move in Nvidia. So that's basically 12 points up or down. So, you're talking, call it 160 to, closer to 190, somewhere up here. Like those are your kind of goalposts of where this stock is implied to move post earnings. Of course, it could be bigger than that, but that's just some food for thought. This is obviously kind of the center of the AI thematic, build out and trade that this whole market is essentially levered up on. So it's an important one to pay attention to, and it's an important one that the market will be, kind of sifting through in terms of guidance and any color that we can get from, CapEx build out and all that fun stuff. But besides Nvidia, we have PCE price on Friday. Got jobless claims out and some durable orders. So, pretty light week, some sentiment data as well, but there's some things to pay attention to on the econ side. But I would say Nvidia is probably going to trump all of that next week. So that's it. That's what I have. That's the roundup for this week. Hopefully you made it through okay. You didn't get too turned upside down for the first 4 days of this week. Powell came to the rescue. I do still think that right now the hardest trade is to stay long. That could change, right? We do these videos every day because price continually, advances and we continue to interpret price action. But from what we're seeing here, most of our models are basically still saying risk is on. There's some choppy signals, but rotation's happening, and we'll see how we can shake out through the end of August. So that is it for me. Thanks so much for tuning in. If you liked it, like it. We've got links in the description of the show. Have a great weekend. We'll see you back here next week.